Now, more than 1 in 4 American homeowners are considered house poor. Yes, house poor is a term dedicated to people who spend over 30% of their household income on their housing. A couple years ago, different economists and experts developed this rule saying that you shouldn't spend over 30% of your household income on housing, whether you have a mortgage, whether you're renting, and that includes everything, not just the mortgage, the insurance, the property taxes. It also includes all maintenance and utility bills associated with owning or occupying that property. And so now more and more people are finding homes that are not affordable, and they're really pushing their budget in order to buy a home. Now, there are some other housing market updates that I just want to update you all in today's video. Before we go on, please be sure to like this video, comment down below your thoughts on what's happening in the housing market, and please be sure to subscribe to this channel. Trying to grow more audience in this niche, so make sure you like, comment down below, and subscribe. All right, here it states that more than 1/4 of homeowners in the United States are house poor. I described the 30% rule, and then right here it says that Miami, Los Angeles, and New York City have the highest number of house poor, which makes sense because the median home price is way much higher. And the thing is, with this 30% rule, it can be a little bit subjective because, for example, let's say you live in New York City and you make $20,000 a month. And let's say your mortgage is $8,000, $9,000 a month. That's more than 30%. Are you considered a house poor? I don't know what are their other living expenses. What are their spending habits? Maybe they spend money on schooling. But yes, people can be super wealthy and be poor because they just spend all their money. But some people actually make $20,000 a month and they just live in a high cost living area, and most of their money goes there, but they still have like $10,000 to spend on whatever they want. And so are they really house poor? I don't know exactly, especially in these high cost areas. You just gotta be a little bit careful about saying that someone is house poor. Now, add inflation and wages into the pot, Americans owe trillions more than they did at the start of the pandemic. Higher housing costs means less set aside for savings, spending, and emergencies. So obviously, since people are more and more house poor, or they have to give up more of their money towards housing, they don't have enough other income for maybe going to the store or buying this type of brand or that type of brand. And so they're very careful because housing is a necessity. And so you see that happening in the economy. Now, another thing that I want to state about the housing market is about the May jobs report that shocked a lot of economists. So it showed that there was 339,000 jobs created in May, topping Wall Street estimates of 195,000. Like, how can they be so far off with their estimates? The thing is, yes, it's great that people are getting jobs, but at the same time, in order to curb inflation, you want that number to actually start to drop, because that tells you that more and more people have money, that have disposable money to spend on the economy, to maybe overbid on a house, overbid on a car, and things of that nature. And it's unfortunate, but in order to really bring prices down so you can have an affordable house, buy an affordable car, people have to lose their jobs more, or there can't be as much growth in the job sector as there used to be in order to really tame down inflation and buy or get prices to more affordable situation or more an affordable point. Now, looking at Redfin's report, we see that pending home sales fell 17% from a year earlier during the 4 weeks ending in May 28, one of the biggest declines since the start of the year. So you're seeing home sales are down, right? People are not able to push their budget to over 30%. Maybe they're still pushing their budget with rent, but with a house, there's more added costs on top of that, right? There's maintenance, right? And there could be more of an issue. Yes, renting, you're not putting equity down, right? You're not being able to own an asset over time. But honestly, buying a house, especially for people who are only putting 3.5% down, you're not really building equity. The first few years of your house is just interest payments. If you're not putting a down payment like 20% or something, you're not really having so much equity, especially in the first 2, 3, 4 years of owning that property. And so my point in saying that renting can be more attractive to people than home buying if they can't put a 20% down, right? And they can't build equity as much. Maybe in the meantime, they rent something where they don't have to take care of the maintenance and other things like that. Now let's go over the leading indicators of home buying activity. So for the week ending June 1st, the 30-year mortgage rate was 6.79%. So it's going up, interest rates are going up, and people were at first saying the Fed was going to pause the hike, but now people are saying, hey, these job reports are too high. Fed is going to hike the interest or the Fed rate again. Mortgage purchase applications during the week ending May 26th decreased 3% from a week earlier. So it's still going down. So purchase applications are down 31%. Google searches home for sales were down 12% from a month earlier and down about 13% from a year earlier. Touring activity as of May 29 was actually up 2% from the start of the year, compared with a 6% increase at the same time last year. So I guess overall it is down, but it's still based off of the start of the year. Medium home sale price is $377,000. With interest rates, that's pretty high still. It's just like, do you remember like you could easily buy a house for like $250,000? $230,000. Well, it depends on where you're at. I'm in the South, so, but prices around where I live is easily like in the 400s now. It's crazy. You can see in this chart over here, this shows the home buying housing payments, and it's significantly higher than 2022. So the average is around 2651 to be exact. Compare that to last year. Last year it was under 2,500, maybe around 2,400. Pending sales are down 17%. And so the orange line represents 2023. And you can see it's been below for most of the previous 3 years, pending home sales. So definitely people are not buying homes as much. And it's because, hey, 1 in 4 people are house poor. They see that their budget doesn't allow them to take that much or to pay that much for these super high housing payments. And so number one, people are not going out buying homes as much, and people are not selling their homes because they see it's limited inventory. There's not a lot of things out there. And so sellers are not even putting their house on the market because they can't find anything. Now, active listings are still on a downward trend. I know I talked about this earlier, when usually they start going up during the summer, and they're not going up at all, right? They're staying flat, actually going downward a little bit, as you can see. And of course, 2020, it did rise back up because the pandemic settled in, but then it went down because, of course, during the fall and winter months, it goes down, as you can see. But usually during spring and summer months, it goes up. But 2022, it was not like that. That's why home prices are still relatively high, because active listings in general, inventory is down. All right, you all, let me know down below if you're looking for a house. Are you waiting for the market to drop? Make sure you check out one of my shorts about that. But it's interesting that more and more people are becoming house poor, right? More people are just really pushing their budget in order to own a home. I still think if you have an affordable place, stay with that place as long as you can. I'm just so grateful that I'm still renting at a super great price. I know people are paying almost double as much as I am for a similar price unit in a similar area. And I actually bought a property separately before I actually bought my own property. You know, rent is just so good for me right now. And so if you actually do find something that you can rent as opposed to owning, you should really weigh out those options. All right, you all, once again, like this video, comment down below, and subscribe.